We found a $780 million trade on Nvidia stock options on the last trading day when it dropped 5% after making a new high. So many of our subscribers are asking us, is this the beginning of Nvidia stock dropping lower, or is this just a short-term pullback and Nvidia will just move up even higher? So in this video, we will analyze the unusual options activity data to find out what this $780 million trade means by this wealthy investor. Because as we all know, the rich are getting richer because they have access to more information than we do. So they know what will happen to stocks, so they can make better decisions as to how to trade stocks in the market. So that is why we follow their trades, so we can also make money alongside the same direction. And after we analyze their trade, we will show you how we are trading Nvidia stock based on this $780 million trade. So without further ado, let's get to the data as usual. Now, Nvidia has a lot of data, so it does take a few seconds to populate here. If you are interested in our higher probability of profit trades where there is not so much data, so the analysis is more clear, then go to our website where we share the trades of wealthy investors with this type of data, but with more certainty in the probability of profit, where there is less data to analyze, so things are a lot more clear. Okay, so for Nvidia, you can see here that on March 8th at 10:48 at the 45-second mark, this wealthy investor is trading these options that expire May 17 and also June 21. 8:20 strike price calls and the 7:20 strike price calls. So what does this all mean? Let's take a look at the chain to find out more. So May 17, two different option cycles. Let's take a look at that 720 strike price call. Here it is. We can see 31,000 contracts at the volume, 34,000 open interest. They are closing this trade, taking profits, because the open interest is greater than the volume. Okay, they're closing out, taking profits, and what they're doing is they're opening a new trade for the Junes. So this is the trade that we want to focus on, because the prior trade was a closing trade. And this trade, you can see for the Junes, is an opening trade at the 8:20 strike price calls, because the volume of 37,000 is much greater than the open interest of 1,951. Okay, so now that we know that this is an opening trade, what does it mean? We believe there is a good chance that they are buying these call options to open. So these Mays are being closed, and what they're doing is opening and buying these options for the Junes to open. And you can see the price that they paid and the quantity for each of these. So we can do a quick calculation of this trade cost, right? So for the first one, we have 20,358 contracts times 20871. Okay, so each of those contracts costs 20,871. So we can see here that that first one is $424.8 million. Okay. Now let's take a look at the second one. 16,965 times 209 958 is 355 million. So we want to make sure we add that previous one of 424.8 million, which is this. And now we have a total of $780 million. So that is how we know the total trade cost of this new position and how much this investor spent. Okay. And so when we analyze this trade at this 820 strike price calls, where they were paying about $20,000 for each of these call options, we can see here that this is clearly a long position here, where they are bullish and going long. All right. Now, by the way, if you are interested in our previous trade on Nvidia here, right here, this is already expired. This was our earnings trade. Doesn't show up anymore because it's expired, but we made more than 700% on the Nvidia earnings. We'll put a link at the top here if you missed this video, where you can learn how we were able to use this type of analysis to predict earnings and make more than 700% for Nvidia earnings recently in February. Okay. So for this trade here, keep in mind, because Nvidia did pull back and they were paying about, we can see here, they paid 208.71. So we can put this in 208.71. They're actually at a loss right now per contract of about $7,000 minus 7,000. See, because Nvidia has pulled back ever since they bought into this trade. They bought this at when Nvidia was at 959. Currently, Nvidia is at 875. It dropped on that day, on March 8th. So that's why they're at a loss currently. But things could change very quickly, especially with Nvidia, if it starts to go up higher. Okay. So how are we trading this based on this bullish long trade? Because we know this is bullish because the delta is positive. If it was bearish and shorting it, this would be a negative delta. Okay. We can see that the profit on this increases as the share price increases. The share price is on the x-axis. Okay, so you can see the profits increase. So this is a bullish trade. So that is why we want to trade bullish, but we don't want to spend $20,000 like this unusual option trade for each of these call options. So what we did instead was we went to the same expiration cycle, and you can see here our trade with the position right over here, where the word POS stands for position is highlighted at the 1,000 strike price. You can see here where we bought the 1,000 strike price calls for the June 21st. And then we sold the 1,010 strike price calls. Okay. So by doing that, this is what the trade looks like. We bought the 1,000s and we sold the 1,010. And so when we analyze this trade, you can see our trade here is this vertical call spread right over here. And it only costs $308, much less than the unusual options at $20,871. And you can see that we are also bullish and going long on this trade. right? We didn't have to spend so much, and we can still go bullish and long with a positive delta right here, right? And you can see that our risk to reward here is, since we are risking 308, the amount of debit that we paid, that's the max amount we could lose on this trade, 308. That's the blue line at expiration. But we can gain at max profit, this blue line here, 692 at expiration. Okay, the purple line is the current date of March 9, but at expiration of June 21, that is the blue line, and that blue line is 692. Okay, over here on the y-axis is the profit. All right, if it's above, that's profit. If it's below, it is a loss. So at 692 max profit, you can see that this trade, we could potentially make 692 divided by 308 is 2.24. So it's a risk to reward ratio of 1 to 2.24, in which we could potentially make 224% profit on this trade. And that is why we use options, because we always want to make sure that the potential reward, the gains, is a lot higher than what we are risking, where we can make more than 100%, because we know that we could lose 100% if this trade does not go as we intended, if Nvidia does not go up higher. And you can see our break even at expiration is actually right here at $1,000 a share. But these call options can actually become profitable immediately. You can see that the purple line starts to rise up even before the expiration, meaning it can start to become profitable immediately. We don't necessarily have to break $1,000 a share to be profitable on this trade. But the sooner, the more profits we can gain, because there is a theta decay where these call options will decay in value. And you can see that that is why trading options is risky, because it does have this theta decay, time decay risk. Okay, so that is why you want to make sure you understand how to use option strategies to reduce your risk and maximize profits. And if you want to learn more on how we are able to do that, make sure to go to our website. We'll put a link at the top here. Let us know in the comments below what you think will happen to Nvidia stock. Will it continue to move higher to $1,000? And if you missed out on our Nvidia earnings video, a lot of information there on how we were able to predict this rise. On it was February 5th, on this day when we initially put in our earnings trade. We'll put a link to this video over here. And then, as we explained earlier, we made more than 700% taking profits after earnings on this day as well. We'll put a link of this video over here. Okay? So take care and have a great day.